In this question, we'll be looking at receipts and payment and income and expenditure accounts. We're dealing with non-trading organizations. Organizations such as clubs, societies, associations, churches, etc. Alright, these organizations, they do not have as the main financial statement a trading and profit and loss account. Instead, they have an income and expenditure account under which income would be grouped and expenditure or expenses would be grouped, and you would subtract and not get a profit or a loss, but instead you'd get a surplus of income over expenditure or a deficit, which is also called an excess of expenditure over income. In addition to the income and expenditure account, non-trading organizations would have a receipts and payment account to show the movement of cash and checks. In a trading organization, this is known as a cash book. Alright? So all cash and checks received and paid out would be recorded in their receipts and payment account. In addition, they may have a bar trading account. This is an optional account. Whenever there is a fundraising activity, based on the nature of the activity, they would have such an account to determine whether or not there is a profit or a loss from that activity. If there is a profit, that profit must be transferred to the main income statement, which would be the income and expenditure account under the income heading. If there is a loss, the loss is transferred under the expenditure heading. Alright. They would also keep a balance sheet, but you must note that in the balance sheet, instead of seeing the word capital, you would see the word accumulated fund. Nonetheless, the calculation would just be the same. Assets equal to liabilities plus accumulated fund, which would mean accumulated fund is equal to assets minus liabilities. Very often, at the commencement of any question, you'll be required to calculate that accumulated fund. And what you'd usually be required to prepare, as with a normal for-profit organization, is that you prepare a statement of affairs, which can basically be like a balance sheet, just with a different name, under which you're going to list your assets, list your liabilities, and subtract and find your capital. In this case, you're going to call your capital the accumulated fund. Some things to note about subscription. Subscription paid in advance, meaning we're in this period, but you collected subscription for, let's say, next year. Such figures would represent a current liability, all right? Because we're actually holding monies for persons, and technically we owe those persons because we have the monies. And we know when we owe persons, that's a liability. On the other hand, subscription that is owing, meaning the members have not paid for a given period, that is a current asset. So anything that is in arrears or owing, it's a current asset as it relates to subscription. Remember, it's a revenue account and not an expense. If it were an expense, owing would be a liability and prepaid or advance would be the asset.